Airlines have been having a phenomenal year, even after you take into account today's hideous performance, where Spirit Airlines got hit with a vicious downgrade from Raymond James, and the negative pin action took the whole group lower. Nevertheless, when the airlines are strong, and they are strong right now, that's good news for the aircraft leasing companies that buy airplanes and then lease them to airlines around the world. Companies like Aircastle, which has a profitable portfolio of 140 aircraft, pays you a juicy dividend that yields 4.2%. This is a well-run company with a stock that's rallied 22% in just the past 6 months. Can it keep climbing? Yesterday, I had a chance to speak with Ron Wainshal, the CEO of Aircastle. Take a look. All right, so you call yourself a value investor in commercial jet airliners. What's a value investor mean?
It means we don't buy the same thing in the same amounts throughout the market. We discern and we look for the good deals.
All right, so are you you're Boeing, Airbus, you're going right to them, or you're actually kind of trading whatever's available at that moment?
More the latter. We've bought from 70 different counterparties in our 10-year life, and we'll do business with the airline manufacturers directly. We'll do business with the airlines. We'll buy from other investors.
All right, now, this is a flush time for the airlines. How does that translate to Aircastle? Because I saw you doing pretty consistently when it wasn't a flush time for the airlines.
There's a lot of growth in the airline sector around the world, and it doesn't happen in an even way. We lease aircraft airlines for the same reason that people might lease automobiles. Airlines may not have the money, they may not want to own the residual risk, and in some cases, we're better at dealing with that than they are.
Are there tax considerations that also make it more reasonable to use you than just outright?
Not so much. I mean, that used to be a bigger play.
Yeah, because they do the triple tax, and we all learned that at law school, that was just this great way to buy aircraft.
This is a much more straightforward way.
Okay. Now, one of the things that I saw was that the breakdown, you seem to be very particular to not have any one region be really important to you.
That's important because the world changes. If we go back, say, 15 years ago when there was the Asian-Russian crisis, nobody wanted to invest with airlines in that part of the world. Then the only safe haven was U.S. airlines. A few years later, everybody's going through bankruptcy in the U.S., and then things change around. Now,
one of the things that Boeing has told us over and over again is, look, there's a nice considerable savings in fuel. But if I'm thinking, wow, jet fuel's come down so much, maybe I can keep my existing fuel. Is that something that Aircastle has to worry about?
I think it's a great positive for the whole business. First,
okay, explain that.
Okay, the single biggest cost item for airlines is fuel.
Right.
When your fuel bill goes down 30% in the course of a few months, you can make more money. Your demand for aircraft increases too. That's good for anybody who's got supply like we do.
Okay, when you say you're analytically driven and price sensitive, is there some sort of algorithm that you guys use about what price is right and what price isn't?
No, I mean, our business is a lot like the real estate market where there's value.
Right. And you're just very good at identify where the value is. You do a lot of trading, right? I mean, your portfolio turns over, so you have planes coming in, you got planes coming out. What kind of planes are you right now you're a seller of?
We're a seller of the older technology aircraft. The drop in fuel prices has given some of these aircraft one last gasp of life.
Right.
And this is a good time to cash out. Now, we're not as interested in keeping those long term.
I saw the percentage that is Europe, and I keep reading about strikes in Europe. I know Europe is weaker. Is this something that you say, well, hold it, this could be Russia someday again? We've got to do less business in Europe. Or are those carriers pretty well capitalized?
There's good carriers and bad carriers from a capitalization perspective. Okay. And sometimes there's opportunities that come out of trouble. So if, for example, there's a currency weakness in the home currency market, we might be able to buy airplanes very effectively from that airline and lease it back to them. So Europe is a mixed story. There's good parts and bad parts.
All right, so Ron, I'm sure because you have that great yield, someone might be saying, well, wait a second, there's got to be some risk, some default risk. Maybe someone doesn't pay them. You deal letters of credit or you deal directly with the customer?
We deal directly with the customer. And you know, the business is always characterized by airlines that go away and they come back. And throughout the business cycle, we've had 98 to 99% utilization. That's pretty good occupancy as a landlord.
So, in other words, if someone doesn't pay, there's someone else who wants that plane.
That's right, but you have to be on top of that as a manager.
Well, geez, that's a terrific business model. It's why I know that you can keep boosting the dividend. Done a terrific job for shareholders. Thank you so much. Ron Wainshal, Aircastle Limited CEO of AYR. Remember, I know you're always looking for yield. Think about this. It's a very stable company with good cash flows that can raise the dividend over time. Stay with Cramer.